Welcome back to the Money Channel. I'm your host, Erin, and today I'm going to talk about a particular website called Start Engine. Start Engine is a website where you can invest in startup companies. Please keep in mind I am not a financial advisor, so you must do your own due diligence. Additionally, I'm going to make a correction to my previous video about what um, accredited investor is. So, an accredited investor is someone who makes $1 million annually or has a salary of $200,000 to $300,000 annually. Okay, so now with that said, I'm going to tell you that you must be aware of startup companies. Investing in a startup company is very risky. 50% of startup companies go bust. So you cannot use your main source of income to invest in this and expect a profit. So therefore, you must use other sources of income or not rely on this. So in 2021, I invested in a company called PorMed, PHORMED. They are a biotech company that researches in diseases and cures, okay, such as cancer and whatnot. So we're going to dive in. Bear with me for a moment. Okay, so as you can see from Start Engine, my portfolio, I invested, like I said, in Poor Med, and I invested 275 shares or about $258.75 worth. Okay, so now once I click this, it's going to show you the actual purchase. Okay. So as you see here, it says share 275. Then it says here fees 8.75. Cost basis $258.75. Payment method credit card. As I told you during that time, I was buying up stocks. Buying up startup companies on credit card. Okay, and then as you can see here, the purchase date was December 19, 2021. So what you do pretty much is once you buy a startup company, the payment is processed, then the funds go into what's called an escrow account. So it will sit there for about maybe 7 business days, 10 business days, until everybody pretty much um, invests. And then once the funds clear, it will exit the escrow account. Okay, so an escrow account is just a holding account where the funds sit for a bit. Okay, so pretty much that's what it looks like, guys. And then it'll say like shares offered, common stock. Okay, so I'm going to show you the particular wording of the document when you sign it. So this is what it would look like once you sign the agreement upon purchasing. So as I said, it's risky, and it will flat out tell you that purchasing like startup companies is risky and purchasing this is risky. So it literally says the securities are being offered pursuant to Section 4A6 of the Securities Act of 1933, the Act, and have not been registered under the Act of the Securities Laws. I'm going to skip down to the blue part on purpose, guys, okay? The purchase of these securities involves a high degree of risk and should be considered only by persons who can bear the risk of the loss of their entire investment without a change in their lifestyle. Okay, it clearly tells you that. Don't think that you're going to invest in startup companies and you're going to be automatically making money and you're going to automatically be able to sue them. No, if they go bust and bankrupt, you can't sue them because you signed this agreement stating that it involves risk, and you may lose your entire investment. So you have to make sure your lifestyle doesn't change if this is lost, okay? So for all I know, this is probably gone. So I can't guarantee that this company is successful, because they're biotech. Biotech companies, they suck up and consume investors' cash in research. That's probably what this company is doing. In fact, when I went into AI and I asked if this company is profitable, it literally said no. And keep in mind, this is 4 years later. We're now in 2025, and I purchased this in 2021. Did this, in fact, change my lifestyle? Did it impact me? No. It's sitting there invisible in my head. It's not even in my mind anymore. I'm not relying on it at all. So that's what happens when you invest in startup companies. You go through what's called Regulation C and Regulation D, okay, or Reg C, Reg D, okay. And then in here, in particular, like right here, it says it's a regulation crowdfunding offering. So crowdfunding, it's better for platforms to use crowdfunding if they want more people instead of closing it off. And then if a person is not an accredited investor, it's easier for them to enter something like this, a crowdfunding platform, because it makes buying startups less expensive for the person that is entering or using the crowdfunding platform. Okay, but a lot of startups do not go into something like this, like a crowdfunding platform. They go through private entities. There's one called Angel or Angels List, which is extremely private. Okay, and you do have to have about $500,000 worth, because a lot of those companies, just the minimum purchase amount is extreme, guys. Like minimum purchases can be like $30,000, 40,000, $50,000. So that's why they say you need to be an accredited investor for many of these things. For crowdfunding, um, you don't need to have, for example, like, a lot of assets like that, because it's easier on the individual investor. However, please don't think you can sue the company if you lose your money or assets because you signed this agreement. I knew what I was doing. Okay. So don't think, oh yeah, even if I don't make $1 million per year, even if, da 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 da, I can just sue them. No, you can't. You signed this. You knew what you were doing. Don't play stupid. So, a lot of these young people, they don't like to read contracts like this, because this contract is 7 pages long, guys. Who's reading 7 pages in today's day and age? Everybody's trying to get the latest, like the fastest information using AI, using summaries, using Chat GPT. No, you have to read the clauses. So guys, this is what I've got for you. If you like my channel, please subscribe. Ciao.